Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're all having a fantastic weekend. We're going to kick off, as we always do, with a quick review of the key events heading into next week. And we're also going to look at the events from last week because there was quite a lot of data coming out last week. It was quite a busy week last week. We're then going to look at the relative currency analysis. We're going to look at the scorecards for the currencies heading into this week. We're going to then do the individual currency analysis. We're going to look at the currencies on their own. We're going to match those two together. And we want to really see those two things confirm in the relative currency analysis and the individual currency analysis. Once that's done, we're going to go and look at the currency pairs in order ranked best to first. We're going to look at the best markets heading into next week as shown by the scorecard system, and that really got us in front of some good moves last week. Pound franc especially is a market that we noted in last week's video. The pound was weakening, the franc was strengthening in the scorecards, and it was a market which had a really nice sell-off to the downside, and a market which could have been traded last week despite the FOMC meeting we had on Wednesday, because it's not going to be as affected as we discussed last week as, say, pound Aussie, pound New Zealand. So pound franc to the downside was a great trade highlighted in last week's video. And once we've looked at the currency pairs going into this week, we're going to finish as we always do by looking at stocks, gold, silver and Bitcoin. And both in stocks, gold and silver, there are some very interesting things happening. We discussed last week in stocks that it looks like we could be coming towards a peak in stocks and we might see a near-term correction. That's still the case, and we're going to look at that again. But gold and silver are something we really need to pay attention to this week, because it looks like we have a major potential breakout in gold, and we're going to discuss that in more detail. And if that's the case, it looks like silver is also going to follow. So we also need to take that into account when we're looking at the currencies and also the DXY this week. So quite a bit to unpack in today's video, and we're going to put all of the pieces of the puzzle together to wargame a plan going into this week, and I'm going to share my plan with you guys. So let's start by having a look at the key economic data from last week, because there was a number of key data coming out last week. We first and foremost had the interest rate decision out of Australia. There were no changes to the interest rate, and the RBA stated that inflationary conditions were likely to continue. Interest rates were going to remain low until 2024. Potentially at the end of 2023, they would look at raising rates, but they highlighted 2024. So RBA reiterating their patience when it comes to raising rates. We also had employment data coming out of New Zealand. This is important to take note of because we had beats on the employment change and the unemployment rate. And when we go over to the scoring system, you will see the New Zealand dollar is holding up better than other currencies, and it's something to pay attention to going into next week. And New Zealand's strength plays are something I will be keeping my eye on going into next week. We also had FOMC on Wednesday, was a bit of a non-event. Fed Chair Powell came out, reiterated the need to taper, but also added in a little bit of uncertainty by saying that if anything changed and they needed to deviate from their tapering plan, they would do so. Now, that could mean they could be more hawkish in terms of tapering faster, or they could deviate in a more dovish way and actually reduce the rate of tapering, etc. So it didn't really mean anything in particular, but the market took it more as a kind of dovish taper by adding in that potential uncertainty or that caveat when discussing tapering. So the Fed was being purposely vague as usual, and the market took it as a kind of dovish taper. And on Thursday, which is very important, something we need to pay attention to, is that the Bank of England kept rates on hold. The market was looking at a possibility of a rate hike, although as far as I'm aware, it wasn't shown in the economic calendar last week. And there were only 2 out of 9 Bank of England officials who voted for a rate hike. So even the vote itself was not potentially hawkish, and the market is now pushing this back and looking for the Bank of England to start to hike in December instead. Now, the reason this is important because this caused a big sell-off last week in the pound. We were already looking at pound shorts in last week's video, and it does make the pound very attractive going into this week. And when we look at the scoring system is underlining the fact that pound shorts are going to be something we really want to keep an eye on going into next week. And in fact, pound shorts next week are my favorite play out of all of the markets and all of the opportunities that we're looking at in the Forex markets. Gold and silver are very interesting setups we're going to look at as well, but currencies, pound shorts are looking like some of the best plays going into next week. I'm going to be keeping my eye on that. And if we come down finally to the end of last week, we had employment data coming out, a hit and a miss from Canada. So nothing really directional here. And in terms of non-farm payrolls, we had a beat, which didn't really do much for the DXY itself. We saw the DXY rallying a little bit, but we also saw stocks primarily spiking higher on this NFP print. But as we'll see when we come to the stock market, we need to be a little bit careful because it does look like we're going to get some near-term corrections. It doesn't mean I'm short on stocks, but as you'll see, it's really a kind of a profit-taking opportunity, in my opinion. Start to take some profits off the table, perhaps even start to look at some of those short positions for a long-short portfolio if you're running a long-short portfolio. But again, all that to come when we look through the charts. And if we finish off here just by looking at the upcoming data for this week, you can see we do have some speeches coming out from bank governors. These can move the markets. They have the ability to move the markets, but these are not really something we'd plan around or plan for in advance. If you see some volatility coming in, you'll know why. But again, like an interest rate decision, this is not something where, or I should say, unlike an interest rate decision, this is not something which I would be planning trades around. We do have some CPI data coming out on Wednesday. CPI data can act as a catalyst. Don't be surprised to see it get volatile on Wednesday. And we have some employment data coming out Thursday from Australia. Again, can act as a catalyst, but it's not something we need to plan in advance for and plan trades around. It doesn't quite have the significance of, say, an interest rate decision. So not too much we need to plan ahead for this week. We do have a US bank holiday on Thursday, so if the market just goes nowhere on Thursday, it's very, very dull, then don't be surprised that you'll know why. It's because it's a US bank holiday. So not too much going on this week, but certainly things we can take from the economic events last week to give us pointers, indications of plays and setups going into this week. So looking at the scores on the doors for this week, what's interesting to note is that first and foremost, you can see the US dollar only really appreciated by 1 point from completely flat last week. This was not a significant move in the US dollar, and in fact, because we're scoring this 1 to 4, anything you see between 1 and -1, you should really be taking as a neutral market. So what this is telling us is the dollar is slightly bullish to neutral, in the same way that the yen and the pound are slightly bearish to neutral. The Aussie is completely neutral, it's completely flat. And the only real currencies showing potential for opportunity this week are the Swiss franc and the New Zealand. That's to the upside. 2 out of 4, and again, if we're 2 out of 4 or 3 out of 4, this is kind of the sweet spot where we want to see currencies in order to start looking for positions or trading opportunities in those markets. And to the downside, which is, in my opinion, the most interesting aspect of the scorecards this week, we had the pound weakening from -2, which it was last week, which was signifying this was a good short last week, and we're now down to -3. So with the failure to hike and that only 2 dissenting voices in the Bank of England voting for rate hikes, this has probably set the stage now for the pound leading into December. And it looks like we're going to see a continued weakening of the pound going into next week. So, what's the point of looking at these scorecards? Well, it's to try and find where the opportunities are going to be. Can we avoid the markets which is going to move sideways or be choppy? And can we get involved in the markets most likely to move? So in my opinion, based on this, it does suggest pound shorts should be a primary thing to look for next week. And certainly, as my plan is, again, you guys are free to trade just as you wish, but for my plan, I will be focused primarily on pound week setups next week. If I can get 1 or 2 trades in pound pairs, even just one good trade, and the pound sells off and we can bank a profit, there's no need to start trying to trade multiple markets. It's really just about making money. And sometimes the best way to make money is just to find the best trade, the best market, and be short or long that market going into the following week. So certainly based on this, I'm going to be very interested in pound franc once again this week. This was a market highlight in last week's video because we saw the pound weakening at the same time the Swiss franc strengthened. And I'm also going to be interested in pound New Zealand to the downside. We can look at some of the other pairs like pound CAD, pound dollar to the downside, but just bear in mind you're trading a weak currency versus kind of neutral currencies. So you should still expect the pound to continue to depreciate against those currencies, but you're most likely to get the best moves out of, say, pound Franc, pound New Zealand. I am also going to be interested going into next week in Franc Yen to the upside. Be looking at Euro Franc to the downside. Euro Franc to the downside was another market highlighted last week, and it was another market which sold off very nicely to the downside, taking out the target set. And so I am going to be interested in Euro Franc to the downside once again. I'm interested also in New Zealand Yen and also Euro New Zealand to the downside. We can also look towards CAD Yen, EurOcad to the downside, and potentially US dollar yen to the upside, euro dollar to the downside. But again, as I say, you're really looking at kind of bullish to neutral currencies versus bearish to neutral. So once we get into that kind of mode, you have a greater risk of reversal. Of course, anytime you're looking at markets, you have a risk of a reversal, but it's greatest when you have neutral currencies. So in short, pound shorts looking like the best play going into this week. The US dollar is more or less neutral after last week's FOMC, and the Swiss franc and the New Zealand, in my opinion, based on the process that we use here, are going to be the better currencies to look for long positions in going into next week. So let's have a look at the individual currencies, starting with the DXY. Now, there is something we really need to pay attention to this week in the DXY. We had that continued rise to the upside, took out the previous highs. This uptrend continued in the DXY last week. This is a very weak close, the way this has come up, taking out previous highs, and it's just kind of sat back inside here. And we failed to take out the target just by a handful of points. When we look at the DXY going into next week, it's only bullish to neutral. It's basically neutral. And this is really reflected in what we're looking at in the technicals here. You can see we have this correction and we are back inside this. I mean, if we were to just put a line through the middle of this as a range, you can see we're coming back down towards the middle of this kind of correction, this kind of range, this contraction. So this is not a particularly bullish currency, but the bullish uptrend is still intact. So what does that mean? Why is this important? Well, the issue here is this. We can't look at the dollar this week without looking at gold, because at the end of last week, gold did something very, very interesting. We started to break what looks like a major reversal to the upside in gold. Now, the reason we're looking at gold here is because we're putting this together with what we just looked at in the dollar, that failure really to break the previous highs in the DXY with momentum, and the fact we're kind of neutral. And we're looking at that at the same time we're looking here at gold. And it looks like we have a 1, a 2 wave, and this looks like a 3rd wave. Why do I say that? Well, first and foremost, we're coming up from a low. So whenever you come up from a low like this, and you get a 1 wave, what you're really looking at is you have 1, 2, 3, 4, 5, followed by an A, B, and a C, and then you get the 3rd wave. Now, this is at the bottom of a potential right shoulder, which in and of itself is an inverse head and shoulders and a reversal pattern to the upside, bullish reversal pattern. And one of the confirming factors you look for when you have these potential 5 waves to the upside, or you're looking for a 1 wave, a 2 wave, and a 3rd wave to come in, is momentum. Momentum is key when you're looking at the start of a trend, either to the upside or the downside, because what's happening is all the traders who are shorting this, looking at this as just a basically sell the rip kind of mentality. Price comes up, they short it. Price comes up, they short it. Well, what happens is when the second wave fails to come down and make a new low, all of these shorts cover their positions, some are to loss, and any stop losses up in this area get taken out, and as a result you see the market moving with momentum. And that's exactly what we're seeing in gold. I mean, look at the close on Friday. This is right near the top. It's not exactly the top, which would be a bit of a distress close, but it's right near the top, and this is showing real strength on this breakout, on this turn. Now, why this is important when looking at the individual currencies is because gold does have a tendency on the turn to lead the dollar index. So we need to look at these two things together, because what we're seeing is a real lack of momentum in the DXY at the same time that gold is starting a potential big breakout to the upside. That indicates we could be near a top in the dollar index. Now, for those of you who follow the video, you will know I don't like to pick tops and bottoms. I'm not going to be short on the DXY unless we come down and break this low here, because this is when the reversal is confirmed, because this would be a double top reversal. This as it stands is just a developing double top. These I've seen many, many times just continue upwards. This is a developing double top over here. Comes down and you make a new high. This is a developing double top. Comes down, makes a new high. So you can see this is not yet a reversal. The reversal will come if this comes down and breaks the low over here. So what I'm saying to you guys is, because of what we're seeing in gold, we may be, and the fact that the currency scorecards are showing the dollar as being kind of flat, we may be seeing a top here in the DXY. Now, why is this important, and how can we use this information? Well, it means going into next week, if I am looking at any dollar positions vis-a-vis other currencies, I would want to keep dollar long positions to a minimum. I mean, really you'd be looking at just maybe $1 strength trade. And we can also be kind of clever about it. If we're worried that this may be a top, but we're not going to jump in right near the top and try and short this thing, there are a couple of clever ways we can play this. One, of course, will be in gold, and we'll come and look at this later when we do gold. But the other would be something like US dollar Japanese yen, which I would be interested in. Why? Because US dollar Japanese yen to the upside in and of itself is actually a reflationary trade. When the dollar weakens, you can still see the US dollar rising against the yen, because the yen is more of a safe haven currency than the dollar. So when you have a risk on mentality, you see the dollar weaken and you see the yen weaken. So you see money coming out of the safe haven assets. It goes into the commodity currencies like New Zealand, like the Canadian dollar, like the Australian dollar. But because the Japanese yen is more of a safe haven asset than the US dollar, you can actually see the dollar falling and at the same time see US dollar yen rising to the upside. So US dollar yen would be a good market in order to reflect any bullish outlook on the dollar going into next week, because if the dollar does reverse, you could still see US dollar yen rising to the upside. And the second market I'd be interested in the dollar is pound dollar to the downside. Why? Because if the dollar does reverse and you're trading it against the pound, well, because the pound is so weak, you could quite easily see the US dollar coming down, and the pound could just either move sideways, in which case, if you're wrong and this reverses, you're not going to lose too much money because it's not going to go anywhere, because you've got two weak currencies against each other. So all that happens is the market goes nowhere. Or in some cases, like we've seen previously with Euro New Zealand and Euro dollar, you could actually see the dollar coming down, and because the pound is much weaker than the dollar, it can still come down and make new lows. So you can actually have pound dollar coming down as the DXY reverses, just on the basis of the pound being so weak. So to summarize what I've just said, the dollar is still trading to the upside, and we are still in an uptrend. It has not yet reversed. Based on what we're seeing in gold, this may be the top for the dollar, and if that's the case, I would primarily only really want to look for US dollar yen to the upside, because you could still profit from that in a reversal of the dollar. And I would only really be interested in maybe pound dollar to the downside, because you could see this staying choppy or coming down a bit, and you could still see pound dollar coming down. Anything outside of US dollar yen and pound dollar in the dollar pairs next week, in my opinion, might be a bit risky, because if this is a top, you will see the dollar weakening. And if you're trading something like US dollar Swiss franc to the upside, because you want to be bullish to neutral on the dollar, you could actually see that coming down quite hard if the dollar begins to weaken. So that's what I see in the DXY going into next week, and because of the risk of a potential top indicated by the gold breakout, those are the two markets I prefer to trade if I'm trading the dollar pairs next week. So a little bit of patience required on the dollar pairs. Next is the euro. The euro is still trending to the downside, and we're moving towards the 1.14680. You can see, reflecting just the inverse of the dollar index, we came down, took out the low, so we're still trending to the downside, but we have no momentum here. It's showing neutrality in the euro, and this is exactly what we see in the scorecards with a -1 reading. It's bearish to neutral. It's neutral, but it's bearish to neutral. Next is the pound. Now the pound is the market which I highlighted last week as good short, because we started to weaken, and we came down very hard. We took out both targets in the pound, and we finished the week right at the second target here. Going into this week, it does look like we're going to come down and make new lows, which means we're going to at least take out this low by the looks of it, and I would say come down to the 1.3401. So what I would be looking for going into next week is any continued pullback in the pound in this direction is going to be viewed as the opportunity to look for short positions down to the 1.3401. And as I said before, this to me represents one of the best opportunities, in my opinion, to make money next week based on how the currencies are setting up. So as I always say, there's no guarantees in Forex, but this looks like one of the best, highest probability moves going into next week. Next is the Swiss franc. The Swiss franc is still trending to the upside, and we're approaching the 1.1024 target after this inverse head and shoulders break. No reason to be bearish on this, in my opinion. It does look like we're going to come up and start taking out these targets and move even higher. So reflecting what we saw in the scorecards as well. Next is the Japanese yen. The Japanese yen is bearish, but we've been very neutral. Why? Because when we saw on the scorecards, we got down into this area. The Japanese yen scored -4. And what did I say at the time? I said this was something which is telling us it's overextended. We're likely to see profit taking coming in and correction. And it's been doing that now for about 3 weeks. It does look like we're in a fourth wave here. And because in wave counts, you have the law of alternation. Very often deep wave 2 equals a shallow wave 4, or a shallow wave 2 equals a deep wave 4, like this. And you can see here we have this, what looks like 1, and then we have a very shallow pullback. So I would not be surprised to see this correcting more. The yen is still rated as -1. It's kind of neutral, bearish to neutral. But keep an eye out in the coming weeks for a reversal in the yen, because it does look like we're going to come down for this fifth wave. So this fifth wave is still on the cards. It's something we discussed in last week's video, but it's just waiting, having the patience to wait for this to start to roll over. But this fifth wave to the downside is something I am keeping my eye on. Whether it happens next week or the following weeks is something I would look to position into on the lower time frames. So how exactly would that look like? Well, we'll go and have a look at that in the yen pairs when we come to the markets. But what you're looking for really is momentum to the downside. So if we go to the 4-hour chart here on the Japanese yen, you can see we're just kind of correcting here. What I would like to see is something like this. The market continues to correct, and then you're going to see it doing this, and then you see a big momentum move in this direction like this. That's what you want to see. And the market starts to do this, and that's your opportunity to start to look for shorts. That's when you'll know the market is starting to roll over, because you'll see momentum coming into the downside, which we haven't got yet, either to the upside or the downside. You see, this is just correcting. So patience required on the Japanese yen. I am still overall bearish, but we may have a little bit more correction to the upside next week. If we go and have a look at the Canadian dollar, the Canadian dollar is a market which, very much like the yen, I noted in previous videos when we took out this target that it was essentially overextended to the upside and we should expect profit taking to come in. It's exactly what we saw after the scorecard showed us this in advance. It showed us be wary of CAD long positions because we're likely to profit taking, and we got that. We got that also exactly from the inverse head and shoulders target, which I highlighted previously. So this is not bearish. This is setting up for a bull flag. I am looking for advance in the CAD. As it currently stands, it's bullish to neutral because it's bullish, but it's correcting. So we're in a secondary trend. In fact, that's a corrective wave or a correction. So I am looking for high highs to come into this market, and I'm looking for the reversal, but as you can see, hasn't taken place just yet. Next is Aussie. Aussie has started to break to the downside, and in fact, quite interesting, last week we had this double top set up, which is a bearish reversal, and we had it right at the major inverse head and shoulders breakout. So what's interesting about this is if we are going to see a top in the DXY, then you would need to see this breaking higher. And the fact that this has broken down right at the previous breakout level, which is essentially dollar bullish, at the same time we have gold breaking out to the upside. Well, something has got to give. It's not going to continue like that, because if the US dollar weakens, you're going to see the Aussie appreciating more than some of the other currencies due to its commodity currency status. So technically speaking, the Aussie is bearish after this double top reversal. That's actually very technically bearish. However, when we compare them to other currencies, it's kind of flat. It's neither bullish nor bearish relative to other currencies. And finally, we look at New Zealand. New Zealand benefited from the unemployment beats last week, and we also noted this major inverse head and shoulders breakout to the upside, and we have now this bull flag setting up. So I am bullish on the New Zealand, looking for further advances, and compared to other currencies going into next week, this market is also looking pretty good. But once again, what we're looking at in gold, in the dollar index, and also in these commodity currencies, with the currencies sitting right at these major breakout levels, is telling you that a big move is likely to come one way or the other. Whether the dollar is going to top and you're going to see it come down and start to see the commodity currencies rallying from here with major trend reversals, or if the markets are going to fail here and the dollar rallies higher, you're going to see the start of big moves to the downside in those commodity currencies. So we're right at the position where we could go either way, but gold, based on what it's doing last week, is indicating we should probably be looking for the next bigger move to come. Dollar down, gold to the upside, and I imagine the commodity currencies will follow gold to the upside as well if that breakout in gold materializes, continues next week. So let's have a look at the best currency pairs going into next week, the highest scoring, strongest versus weakest currency pairs. First, I want to just look at crude oil as we usually do. And you can see crude oil is structured to the downside going into this week. This is going to have a bit of a soft negative impact on the Canadian dollar. We saw the Canadian dollar was just scoring 1 out of 4, so it's kind of bullish to neutral. And this is kind of reflective of the profit taking coming in fact, to the Canadian dollar we looked at from that inverse head and shoulders target. Last week, I did state that although crude oil was trending to the upside, I wasn't particularly keen on it. Why? Because the dollar was still bullish. And whenever you have a stronger dollar, it's going to weigh slightly on crude oil. You can still see the dollar rising and crude oil rising at the same time, but the best, most explosive moves in crude oil tend to come to the upside when you have a weak dollar and to the downside when you have a strong dollar. And as we got a new high in the DXY last week, we saw crude oil coming down. Now, it does look to me as if this is just a corrective wave. So going into next week, yes, it does look like we could come down to the 78.85. I do have a bearish bias on crude oil, but you don't have to trade corrective waves. If you have a bull flag like this and the market's doing this, the reward on short positions tends to be capped. Why? Because corrective waves are choppy. So any moves to the downside, you tend to catch a bid and it starts to go back up, then it comes down, goes back up, etc. So just because I have a bearish bias on crude oil doesn't mean I have to go out and short it. If you are looking to trade it, I would prefer shorts, but what I would really prefer is for this to continue down and then wait for a new reversal with momentum to break to the upside, and then oil long positions, because I do think we're going to come back up to new highs in the coming weeks. That would be my preferred play on crude oil. So for me, patience required. If you really want to trade it next week, I would be bearish on crude oil. Next is pound franc. Now, pound franc was a market I highlighted to the downside last week, and we took out both of these targets. And we took out both of these targets with momentum. I mean, look how nice a sell-off this was last week. And in fact, in last week's video, this was exactly what I highlighted. I said to you guys, if we take out these lows here, you're going to see all of the bullish traders trading this inverse head and shoulders cover their long positions, and we're going to see this break to the downside in all probabilities with a momentum. And we could, as a result, start to see this very, very choppy consolidation pattern all the way back from April and May actually start to break out, and it would be suggestive as a failure to the downside with this inverse head and shoulders failing. So if we break the 1.2470 in this market, we could actually see some strong momentum coming in, as all of these traders who have been trading this to the upside, looking to buy into this inverse head and shoulders, they're going to have stop losses down in this area. Some will be more aggressive down below the right shoulder, so you could see some momentum here, and others will be more conservative in their stop loss approach, will be down below this low here. But either way, if we break these levels, we're likely to see some momentum coming in. Going into this week, look at the momentum we have to the downside after this previous breakout. This is really strong, nice momentum. This is indicative of further lows. Why? Because momentum precedes price. So any continued correction in this area will be viewed next week as an opportunity to look for short positions down to the next key area of support at the 1.2227. I do really like pound franc going into next week once again. Next is pound New Zealand, because this is the second pound pair that I like after pound franc. Highlighted in last week's video as a good short to the downside. In last week's video, the scorecard showed New Zealand as the strongest and the pound as one of the weakest. And what happened? We had a really nice pullback, and this was your opportunity to go short right into the target. I mean, we more or less picked the bottom of the week last week with the target set. So great move last week in pound New Zealand. Going into this week, I am looking for any pullbacks in this area, just like this move over here, will be viewed once again as an opportunity to look for bearish setups down to the next key area of support to the downside and the target set, the 1.8867. I do really like pound New Zealand as well. Pound New Zealand, pound franc are my two favorite pairs going into next week. Just bear in mind though, they are both pound pairs. So if you go short on both of them and the pound reverses for whatever reason, although it seems unlikely, then you would be stopped out on both of them. So just bear that in mind if you are looking to trade those markets. Next would be pound dollar. Now pound dollar, you can see we have really nice momentum. We took out both targets to the downside in last week's video. Coming into this week, I don't like pound dollar as much as pound franc and pound New Zealand, but we do have very, very, very strong momentum. And again, this is indicative of a potential correction and then further declines to the downside. And I do think there's a good chance we come and take out these lows over here and the 1.33980. So one way you could use pound dollar going into next week is as a synthetic hedge to gold. You may decide to go long on gold to the upside, which is a dollar week setup. And at the same time, you may decide to go short pound dollar. And if you have a 2-to-1 opportunity on one of the markets and a 2-to-1 opportunity on the other markets, and let's say the dollar rallies and you make profit on pound dollar of 2x and you lose your money on gold of 1x, you're still up 1x. Or if the reverse happens and you see the dollar selling off and the pound rallies higher and you lose your 1x on the pound and you make your 2x or more on gold. That's how you can build a synthetic hedge. So something interesting going into next week, but if you are wary about what gold is showing and you would rather avoid dollar strength trades because of it, or you would rather look at US dollar yen, then I would prefer pound franc and pound New Zealand going into next week. But it does look like we're going to come down at least for one more low here in pound dollar. Next is pound CAD. Now pound CAD also took out the target set from last week's video. And again, you see the momentum coming into this market after this previous breakout. So any pullback in this market will be viewed as an opportunity to look for bearish setups down to the next key of support to the downside and target set, the 1.6692. With crude oil selling off and this weighing on the Canadian dollar slightly, pound CAD is not as preferred next week for me as pound franc, pound New Zealand, but it is certainly a possibility, and it does look like we're going to get further declines next week. And finally, pound Aussie. I'm not a huge fan of pound Aussie going into next week. I have added it into the video purely because you're looking at a very weak pound versus a neutral Aussie. But the Aussie pairs, because they're just completely flat, I don't think they're the best currency pairs to be trading next week. However, any pullback in pound Aussie will simply be viewed as an opportunity to look for bearish setups down to the next key of support to the downside and the target set at the 1.8062. So now we've looked at the weakest currency, let's go and look at the strongest currency going into next week, which is the Swiss franc. We've already looked at pound franc, but the next market I like is franc yen. When you look at all of the other yen pairs, you will see that we're getting these kind of wave 4 corrections. We looked at it last week and we're going to look at it again in a bit. But franc yen is holding its own in its uptrend. It hasn't even started to correct. So if we do start to see New Zealand yen rising, CAD yen rising, Aussie yen rising, I would expect to see franc yen rising much faster. The one thing to note is I would not go too crazy on Swiss franc strong positions because the Swiss National Bank wants to see the Swiss franc devalued, and you always have that risk of them stepping in and saying something and reversing the Swiss franc. So I do like Swiss franc positions. I will be taking them to the long side, but don't take too much risk on Swiss franc long trades just in case the S&P come out and start to talk it down. Risk management helps you in those situations. You know, if you're going to be wrong, you're going to be wrong small or on just a couple of trades. You don't want to be wrong on, say, 6 trades or 8 trades. So going into next week, I do like Swiss franc, Japanese yen to the upside. Any continued pullback in this market will be viewed as an opportunity to look for bullish reversals. We want to see that momentum coming into the upside first. And then I'm going to be looking at initiating longs up towards the next key of resistance, the upside, the target set at the 125.89. Next is Euro franc. Euro franc was a market I highlighted in last week's video, and you can see we started the week over in this area and we came down and we took out the target almost to the point that was the low of the week. Going into this week, what I would like to see is any pullback first. I'd like to see this correcting up. We're starting to lack a little bit of momentum, but any pullback in this market would be viewed as an opportunity to start to look for bearish reversals in this market. And we're going to be looking, if we start to get this momentum to the downside, at initiating shorts down to the 1.0507, and if we break through here, because we're fairly close to it over here, going to be looking down towards the next key of support to the downside at the 1.0411. So I do favor pound weak setups, but franc strength setups are my second favorite plays going into next week. Next is the euro pairs. Now the euro is at -1, so it's bearish to neutral. It's not a super weak currency, so just bear that in mind if you are trading euro pairs next week. Euro shorts are my third preferred setups after pound shorts and Swiss franc long positions. Euro dollar, I put this market in every single week because lots of people like euro dollar and they want me to put it into the forecast. You can see we haven't really gone anywhere in euro dollar. We're back inside this range, very similar to what we looked at, but inversely in the DXY. Now, how I would prefer to play this, I am personally short euro dollar. I do think as it currently stands, we could see euro dollar coming down. Why? Because in the DXY itself, although gold is suggesting we may have a top, I explained to you guys already, we haven't topped. That would come down below this level in the DXY, giving us that double top. That's the confirmed reversal. So I am bearish on euro dollar, but what I would like to see really, if I was going to get involved to the short side, is I would like to see patience first, and I would like to see the US dollar breaking higher, so continuing up, failing to reverse lower and continuing the trend up. And what will happen is when the dollar does that, you will see euro dollar, it will come down, it will take out this target, and it will start to break below this consolidation. And when it breaks below this consolidation and starts to pull back, that would be my opportunity, my preferred shorting opportunity. So I am bearish on euro dollar, but because it's in this range, what I'd like to see, and because the dollar could be topping, I'd like to see, no, the dollar is not going to top. Maybe the gold breakout fails, we see the dollar rally higher, and euro dollar breaks down below the bottom of this range, and any pullback in this area, in my opinion, would be the better shorting opportunity rather than trying to short it into the bottom of this near-term corrective pattern. So I am bearish on euro dollar as it currently stands, but I would personally like to see that break higher in dollar index and a breakdown below the bottom of the range before I look to short this. Next is Euro New Zealand. Euro New Zealand is pulling back, and you can see this has just been correcting. We are seeing a bit of strength coming in. However, any pullback in this market is viewed as a potential opportunity to look for bearish reversals. Again, look for that momentum to the downside. And any bearish reversals, we start to get this kind of bear flag pattern, would be viewed as the opportunity to look for short positions down to the 1.6029. Next is EurCad. We're now moving into the realm of a bullish to neutral currency versus a bearish to neutral currency. I've put EurCad in here to show you something, which is that, yes, I am still looking for further declines, but look what happens when you have two neutral currencies. The market doesn't really go anywhere. So I'm quite happy for EurCad to come down maybe from here and me not even be involved in this if you can allocate capital, say, to pound franc, or you can allocate capital to pound New Zealand, or maybe even euro franc, or a market which is more likely to move. So I'm not saying EurCad can't come down. What I am saying is, based on the fact we have two neutral currencies, I don't think it's the best place to allocate capital personally. Right now, I'd like to see this breakout one way or the other before I started to get involved in EurCad once again. So I think EurCad needs a little bit of patience, and the same for EurAusd as well. We're seeing EurAusd pulling back, and what we have here is a flat currency in the Australian dollar and a bearish to neutral currency in the Australian dollar. So EurAusd off the table for me for the time being. It does look like we're going to come down, and this would most likely happen if we get that DXY reversal, because the Australian dollar would likely outperform the euro. You would see a break lower, and then perhaps coming into next week, this would be the opportunity to look for shorts. So I am still bearish on this, but I'd like to see a little bit of strength coming into the Aussie, or a bit more weakness coming into the euro before I look to short this. And we'll finish off the currencies with the yen pairs. Again, when you're looking at the yen, you're looking at a bearish to neutral currency. So it's not super bearish. So you just need to bear that in mind, be a little bit careful. The first one we're going to look at is US dollar yen. I do quite like US dollar yen, and it's for reasons discussed at the beginning of the video, which is that this market is structured to the upside. It does look to me like we're going to come up and take out the 114.730. And US dollar to the upside against the yen is something that can take place with the US dollar selling off. Why? Because as I said at the beginning of the video, you can see safe haven money coming out of the yen faster than it comes out of the dollar, which leads to the US dollar yen rising even when you have reflationary scenarios going on, like Aussie, New Zealand, CAD to the upside, dollar to the downside, etc. So if you are looking to trade dollar to the upside next week, but you're a little bit wary of that potential reversal, US dollar yen is potentially one of the best currencies. You could look at reflecting that view. So any continued pullback and a reversal, we're going to see momentum to the upside. If we start to get this momentum to the upside, any pullback will be viewed as an opportunity to look for further advances up towards the 114.730. Again, you don't have to trade any of the yen pairs or any of the dollar pairs if you don't want to next week, if you think there are better opportunities elsewhere. Next is New Zealand yen. Now, nothing has really changed in the New Zealand yen or CAD yen, Aussie yen analysis. And this is that these markets are all setting up for fourth waves. And this is just reflective, or I should say they're setting up for fifth waves, they're in fourth waves. And this is reflective of what we looked at in the Japanese yen in and of itself. Looks to be a fourth wave, and it's going to be selling off for a fifth wave to the downside. So no change in the analysis on these yen pairs here. We're just correcting for this fourth wave. Very often, fourth waves reverse, or they tend to reverse shallow fourth waves at the 0.382 Fibonacci's, which is right here. So we are getting quite close to this, especially if we're going to pull back a bit more in the yen. As I said, this is a market I'm looking for further advances in, but it may take a couple of weeks as we continue to correct. If we come down into this area, this is when you can start to look for those momentum moves to the upside. And if you get that, if you start to correct into these levels and then you rally to the upside, this is your sign to start to look for bullish setups up towards the next key of resistance, the upside and target set at the 82.68. CAD Yen, also in a fourth wave by the looks of it, and any pullback in this area, you can see we're right down near the lows. So we're still correcting, but any continued pullback is viewed as an opportunity to start to look for bullish breakouts at some point in the next week or two. And if we start to break higher, we're going to be looking up towards the next key of resistance, the upside and target set at the 93.21. And finally, Aussie Yen. Now the Aussie is pretty flat going into this week, but if for whatever reason we catch a bid in the Aussie going into next week, again, this is going to be a setup where I'm going to start to look for bullish reversals. And again, what I want to see is really nice momentum breaks to the upside, a nice bull flag, and I'm going to be looking up towards the next key of resistance, the upside and the target set. First of all, the previous high, and then on to the 87.19. And finishing off with stocks, gold, silver, and Bitcoin. For those of you who follow the weekly forecast, you will know that once we started to break out this inverse head and shoulders, I even tweeted out that this was the bottom of stocks, and we've had a really nice rally. This was the beginning of a new trend to the upside, and we have seen really nice up moves in the stock market. I did note last week that with the work that I go through and the things that I look at, it does, as of last week, I did see warning signs flashing that we could be due a near-term correction in the stock market. And I said to you last week that we could come up, take out the targets, and that would probably be the end of this recent rally. We really finished quite near the highs. So we didn't start to reverse last week. But once again, guys, going into this week, I am seeing warning signs flashing. And it's telling me still to treat this as a profit-taking opportunity, that we may get some more upside, but upside is limited right now compared to the potential downside. So what does this mean? Well, we took out both targets last week. I am still bullish overall on stocks, but what I would like to see first is I would like to see the market starting to correct. And once the market has started to correct, then I will be interested in looking for further advances up to the 4749.90. And this is not just on the SPX, this is on all the stock indices that we're going to be looking at. So to summarize for you, to make it clear, I do believe that these are levels at which we should be looking to book some profits, and I have booked some profits on stocks myself. And also, if you're running a long-short portfolio, this would be an ideal time to start looking for some of those short setups in stocks, not in the indices. I'm not saying short the indices, that's not what I'm saying. I'm saying looking for stocks which are good short opportunities within the indices, and then you can use those as a hedge as part of a long short portfolio. So if the index does start to correct and come down, say 3-4%, and you start to see your long positions turning in the opposite direction, you're going to make money on your short stock positions within that index because you've hedged it out. If you're not at that level yet and you're not hedging out or building portfolios, you're quite new to trading, I would suggest, if you're looking to trade the index or the indices themselves, not buying at this level, waiting for the correction. Because as I said, I think the upside is limited here compared to the downside near term. Next is the Nasdaq. You can see the Nasdaq also took out the targets to the upside last week. So a really nice rally in the Nasdaq, and this was back when I highlighted for you this inverse head and shoulders reversal, the start of a new trend to the upside. I am looking further advance in the Nasdaq overall, but again, I view this as being a potential profit-taking area. I think the risk of a correction is greater. So if you are just trading the indices on their own, I wouldn't look to be buying in at this level. I would wait for the pullback, and then any pullback would be the opportunity to start to once again look for bullish breakouts into the 16,711.74. Again, if you're more advanced and you're building portfolios, this would be profit taking and a chance to look for some of those short positions to hedge out any risk of a correction from this area. Next is the Dow Jones. Ever since we started to reverse down in this area in the Dow Jones and bottom, I have been bullish, and this did kickstart a nice move to the upside, and we took out the target almost to the pip last week at the 3642844, and that was pretty much the high of the week in Dow Jones. I'm still bullish on the Dow Jones. What I would like to see though is a correction take place first, as I said before with the previous indices. Any pullback will be viewed as an opportunity to start to look for bullish setups once again up to the 36957.52. Next is the Russell. Now, last week in the Russell, we smashed through the target set to the upside, and we started to break out of this multi-month correction. And I did note in videos past that if we started to break up, we could break with momentum because of the length of this correction. Very similar to what we looked at in pound franc, but just in the opposite direction. We have had a really nice rally to the upside. What I would like to see, based on what's already been discussed, is I would like to see a pullback first. It does look like we could have a correction incoming in the stock indices. Any pullback will be viewed, though, as an opportunity to look for bullish setups into the 2491.51. And last but not least, we have the Nifty. Now, the Nifty is a market that previous videos we've been trading to the upside, and ever since we broke this inverse head and shoulders, it kick-started a really nice trend. And a couple of weeks ago, I noted this was now bearish. Doesn't mean, again, to go out and short it. Just simply means if you're long in the Nifty, you can book some profits. If you are looking to be long only, this would be a time to wait and really look for a new reversal to the upside. Just as we reversed up here, just as we reversed higher over here, I would really like to see the Nifty breaking higher, pulling back. Maybe we get an inverse head and shoulders like this, and then we start to break for the next move up. So as it currently stands, you can see we went nowhere last week, and that tends to be the case when you're in a correction. So I would be patient on the Nifty, and really I'd like to see this start to reverse higher before I'm really interested in the Nifty once again. If you like to short stocks, I do have a near-term bearish outlook on the Nifty, but I would like to see it reverse higher personally first, so we can get back to being long on the Nifty. And finishing off with gold, silver and Bitcoin, and of course these are things we really want to look at going into next week. I already touched on this at the beginning of the video, and if you've skipped to the end just to have a look at gold, it might be worth going back to the beginning of the individual currency analysis when we look at the dollar and I discuss this breakout in gold and how this can actually impact the DXY going into next week, and may even be signaling a top in the DXY. But in gold itself, as we discussed, it does look like we have not just this inverse head and shoulders, but in the right shoulder, from the bottom of the right shoulder, it looks like we have 1, 2, 3, 4, 5, choppy fifth wave, followed by a failure to make a new low, which is a second wave, and then a break higher with momentum. So not just a break higher, but a break higher with momentum and a very, very strong close. Tells me this could be the start of a third wave, just as we looked at in some of those other markets where we saw in the Nifty, for example, we had that really nice inverse head and shoulders, and then that kick-started the major trend to the upside in the Nifty. So this is very important, because even if this breakout to the upside fails and we start to get the dollar index rallying, I do think these kind of trading situations here, namely where you potentially have the start of a third wave, they provide some of the best risk to reward opportunities. And even with the DXY as a +1 rating, which is kind of bullish to neutral, I personally think, and I already have taken some positions in gold and silver right at the end of last week, I think it's worth the risk of being stopped out on a reversal to the downside in gold for me personally to be involved in this to the upside if this is going to kickstart a big third wave. Again, you guys are free to trade as you wish. I'm not telling you guys to trade gold. I'm just saying, for me personally, I really like this setup, and if this is going to be the start of a bigger trend to the upside, I'm personally prepared to risk some capital, a sensible amount of capital, for positions in gold, and also silver should also follow it. So very simply put, going into next week, I am bullish on gold. I do think that this could well be the start of a third wave. We drop down to the 4-hour chart. You can see this a little bit more clearly. 1, 2, 3, 4, 5. We even have the alternate wave count. You can see 1, shallow 2, 3, deep 4, 5th, and then you have the correction, and then you have the break with momentum. Look at the momentum coming into here. So any pullback in gold next week will be viewed as an opportunity to start to look for bullish setups. I'm going to be looking up towards the next key of resistance to the upside in the target set at the 1834.01, but just bear in mind this in and of itself could see momentum as we break the 1834.01. Why? Because this is the confirmation of the major inverse head and shoulders in gold. So if this is the start of the minor trend right here, this is the start of the major trend. And I personally, with positions that I had from last week, would like to see this break the 183401, not to book profits, but instead see this just as it's breaking here with momentum, see this breaking here with momentum as well, and that would actually be the sign that this really is the start of a major trend to the upside in gold. So gold is absolutely a market I'm keeping my eye on next week. Next is silver. Now silver is also starting to break to the upside. You can see we're forming this potential inverse head and shoulders. Some people will call this a cup with a handle even, because you've got this kind of shallower correction here rather than coming all the way down to the right shoulder, or the left shoulder in this case, but the right shoulder over here, that would be more textbook. Either way, it doesn't really matter. The whole point is the psychology is here. You've got people selling in from these levels over here, and these shorts are failing to drive price down, and as buyers come in, all these shorts are likely to cover, and this is going to drive price to new highs. And if we break this high over here, this is the start of a potential trend change to the upside and a third wave in silver. And again, you've got a near-term target here of the 25.31, but if this is a 1 and this really is a 2 and we break here with momentum, I would question why we'd want to book profits at 25.31. This is the kind of major trend reversal where you would want to hold on to this for as long as possible. Again, I'm not telling you guys how to trade it. I'm just telling you how I will be looking at playing this setup, and the fact that I'm seeing this more as a bigger fundamental position trade if we start to break higher than a short-term, near-term trading opportunity. So I do really like gold and silver coming into next week. And again, I've highlighted the key levels here for you, that if we start to break this high, for example, with momentum, that is indicative of a major trend change to the upside. And if we pair these with what we're seeing in the DXY, if we start to top out in the DXY, that is going to send gold and silver higher. So these major breakouts in gold and silver to the upside are, in my opinion, definitely something we want to be keeping an eye on next week. And last but not least, we have Bitcoin. Bitcoin has been trending to the upside. We pulled back. I did highlight in previous videos the 57,867 for you. We bounced from this level, and it looks like we're actually now forming this inverse head and shoulders, which we confirmed above this level here. The fact that we have yet to come and take out the right shoulder tells me this head and shoulders is still intact, and what's happening here is we're just coming back by the looks of it and testing this kind of trend line. I'm not big on trend lines, so I'm going to take this off because I was just putting this on here to show you, because you can see already, look, you're coming to break down this trend line. Some people may even view that as a trend line breakout. I wouldn't personally, and I would still look to be bullish on this. You can see here, this is the inverse head and shoulders break, but again, you don't really need this on here. So I am still bullish on Bitcoin, and especially if we start to see the DXY topping out and we are going to get major breaks to the upside in gold and silver. If we get those trend reversals, expect to see Bitcoin coming up to the 67,516 and potentially even higher. So I am still bullish on Bitcoin, even though we've been correcting. I view this correction as potentially now coming to an end with this inverse head and shoulders confirmed above here. So that is it for me for this week, guys. A lot we unpacked in today's video, and I hope it wasn't too long for you. As always, if you did enjoy today's video, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.